Hello everyone, this is Latish. In today's video, we are going to explore something every ethical investor in India is curious about, as I have not done this comparison video earlier. Tata versus Quantum Ethical Fund. Both the funds are built on Sharia principles. That means they invest only in businesses that align with ethical guidelines. They focus on companies like IT, healthcare, automobiles, FMCG, and also energy. But the real question is, how do these funds compare in terms of returns, portfolio construction, and diversification? And what happens if you combine them in your portfolio? Stick with me till the end because I will also share a real 10-year SIP example where just 5,000 a month grew to almost 12 lakhs. Plus, I will also show you how you can do this kind of fund comparison yourself using the Rupeesy app's MF Lab feature. Before we go deeper, here's a quick reminder. If you would like a personalized investment plan, whether SIP or lump sum, that's aligned with your financial goals like retirement, child education, or wealth creation, my WhatsApp link is in the description. You can also connect with me directly in the number which you see on the screen. I will help you design an ethical, Sharia compliant portfolio that balances risk and growth. Let's begin with the backgrounds of these two funds. First, Tata Ethical Fund, one of the oldest ethical funds in India, launched back in 1996. That's nearly 3 decades of market experience. It currently manages an AUM of over 3,500 crores, which gives it stability and investor trust. Fund manager is Abhinav Sharma, who has an experience of 18 years. The second one, Quantum Ethical Fund, launched only in December 2024, so it's still very new, with an AUM of about 67 crores. It's much smaller in size. Managed by Chirag Mehta, a respected name in Quantum AMC with 23 years of experience. The contrast is clear in this. Tata Ethical has history and scale, while Quantum Ethical Fund offers fresh positioning and potential to grow. Now let's talk about numbers, because performance is what investors really care about. Tata Ethical Fund, over the last 10 years, it has delivered a CAGR of about 11.4%. That means it has more than tripled investors' money. Over 5 years, the CAGR has been stronger, around 17.6%, showing it has ability to perform in recent times. In the last 1 year, however, it has seen a drop of 12%. This is normal in equity markets and highlights that even ethical funds face volatility. Quantum Ethical Fund, since it's launched less than a year ago, the data is very limited. From December 2024 till September 2025, it's roughly flat at 0.3%. Too early to judge, but it's important to know that every large fund today, including Tata Ethical Fund itself, also started small and needed time to build a record. The takeaway here is Tata is proven performer across cycles while Quantum is still in testing phases. Performance is one thing, but the real insight comes when we look inside their portfolios. When I did the analysis, I found that Tata Ethical and Quantum Ethical have just 14 stocks in common, which works out to be an overlap of about 18%. That means a massive 82% of holdings are different, which is great for diversification. Examples, Tata Ethical includes Hindustan Unilever, BPCL, SRF and Alchem Labs, whereas Quantum Ethical Fund holds Marico, Bosch, Persistent Systems, Eicher Motors and Dr. Lal Path Labs. Sector allocations also differ. Tata Ethical Fund is heavier in IT, 20% and healthcare is 14%. Whereas Quantum Ethical Fund leans on automobiles at 17% and consumer durables at 14%. Now why does this matter? Because when IT underperforms but autos do well, like it's doing right now, Quantum cushions the fall, and when pharma or FMCG rallies, Tata provides stability. So by combining both, your returns can be smoother and less volatile. Now here is something really useful that I personally use. I want to introduce you to Rupeesy, a platform trusted by lakhs of investors for over 20 years to make smarter investment decisions. It's 100% AMFI and SEBI compliant. When I check the overlap between Tata Ethical and Taurus Ethical, I use the MF Lab feature on the Rupeesy app. With MF Lab, you can compare different funds side by side, check how much overlap exists in their portfolio, analyze sector allocations and asset mix, test your portfolio before you actually invest. For example, as you can see on the screen, Tata and Taurus has an overlap of 30%. MF Lab shows you instantly and helps you decide whether adding a second fund actually diversified or just duplicates. That's why I recommend using Rupeesy to explore funds confidently. The best part, account opening and AMC charges are completely free. You will find the link in the description to download and start using Rupeesy app today. Both funds are categorized as very high risk. Tata Ethical with standard deviation of 12.9 and Sharpe ratio of 0.48. This means it has moderate volatility but offers fair risk adjusted returns. For Quantum Ethical Fund, as it is less than 3 years, there are no track records, but small AUM funds can be more volatile. Ethical doesn't mean risk free. These are still equity funds, so you need to have patience and long horizons. Let's look at a real example. If you had started a 5,000 SIP in Tata Ethical Fund in September 2015 and continued for 10 years, the total invested amount would be 6.05 lakhs. The current market value 11.94 lakhs, which is an XIR of 13.1%. Despite demonetization, COVID crash and 2022-23 corrections, the fund still doubled your money in 10 years. That's the power of long-term SIPs. If you had invested a lump sum instead, 10 lakhs 10 years ago in Tata Ethical Funds, this would be around 31 to 32 lakhs, giving you a CAGR of 11.4%. Yes, it slightly lagged gold and Nifty 500 Sharia index, but tripling the wealth in a decade is still solid performance. Now let's check Quantum Ethical's SIP record. A 5,000 SIP started in December 2024 and continued till September. Total investment is 45,000 and the current value is 46,493 with the XRR returns of 9%. It's only 9 months, so it's too early to judge, but it shows that even in choppy market year, the fund has managed to stay slightly positive. So who should invest where? Tata Ethical for investors who want stability, proven history and large AUM. Quantum Ethical for younger or aggressive investors willing to bet on newer. Best approach is don't choose one, but combine both. As an example, could be 70% in Tata and 30% in Quantum. Tata brings the stability and long-term record, whereas Quantum adds fresh ideas and sector exposure. Together, they reduce concentration risk and smooth out volatility, leading to better compounding. Now, here is the most important part. How much should you invest and in what mix? That's where I help. As an advisor, I create personalized ethical investment plans. My WhatsApp link is in the description and also in the comment section. You can always reach out to me so that we can build the plan for you and start the investment. And if you have found this useful, please like, share and subscribe to our channel. Leave your questions in the comments. I will reply personally. So until we meet tomorrow, thank you for watching and have a good day.